Hello everybody. So in today's video, I want to quickly highlight how well big tech scores on my most undervalued stocks spreadsheet. And what we quickly find out is that for certain of these stocks, it doesn't score that bad. In fact, many of these big tech companies score better than a lot of the quote unquote hot SaaS stocks, like the Snowflakes of the world or the CrowdStrikes of the world. These stocks do well, and in fact, I own Triple Q through my retirement because I don't have a choice. Retirement accounts, oftentimes, the riskiest thing you can buy is the QQQ, the NASDAQ. But if you look at the performance of the QQQ over the past 10 years in this example, you can see it's been 18% average annual return. Big tech has performed very well over the past 10 years, and in my view, it will continue to perform very well. And so let me get started and cover Apple. So Apple, of course, is the behemoth company out there. It is the largest company in the world by about $500 billion. So I guess it has one JP Morgan of difference. There's one JP Morgan of difference between Apple and Nvidia. Nvidia, of course, is almost $3 trillion in valuation. And Apple is hitting the law of large numbers. It's growing at only 2%. But if you look at Apple keynotes, and I watch this every year. Every year I watch them in September. What you notice is that Apple is just getting ever bigger, right? This year they announced more incursion into health. They announced hearing aids, essentially, right? AirPods turning into hearing aids. So they're likely going to disrupt that entire audiology market. And of course, the big opportunity for Apple, in my view, at some point in the future, will be the AR, VR, AI glasses. That's maybe 3 or 4 years down the road. We know Meta's working on this quite a bit as well, and I'll get to that in a second. The major opportunity for Apple right now is AI and rolling out AI, actually turning Siri into a useful AI. And that will push a new upgrade cycle, in my view, because a lot of people are not upgrading their iPhones. If AI gets incorporated, they might get into the new iPhone, and you might get a new wave of sales for Apple. So, of course, on my metric, EV over GP over RG, it looks awful. But the reason why it looks awful is because it's only predicted to grow at 2%. The question is, if you look at the growth of Apple for the next 10 years and you annualize it on a per year basis, how much higher than 2% can you get? And my guess is that you can get much higher than 2%, especially if they introduce more compelling iPhones, as well as the Vision, Apple Vision, being in a more compelling form factor. I don't count Apple out whatsoever. I would not rule it out. Gross margin is very high for hardware, as well as EBITDA margin at 34%. Very well-run company. I don't own it directly. Of course, I own it through Index Fund. Now, let me move on to the company that is cheap on my framework, relatively cheap compared to many stocks I cover on the channel. It is Nvidia. Believe it or not, Nvidia is cheap. Why is it showing it cheap at a 0.47? Because it's predicted to grow sales next 12 months at 87%. And if you look at this spreadsheet, my new spreadsheet, I added 52-week performance, right? So Apple stock is up 30%. I mean, all of these stocks are way up, aside from Tesla, and we'll get to Tesla in a second. That's just Tesla for you. Anyways, it's up 179%. And despite it being up 179%, I am still getting an EV over GP over RG of 0.47. And the rule of 40, they just blow through the rule of 40. They are almost 4 times the rule of 40 at 151. They are just printing cash, printing money. And I think this is going to go even further, even more accelerated as they roll out Blackwell. I love Nvidia very much. I don't own it because I sold it much lower for a nice profit, and I thought it was already too expensive. It was a mistake to sell it, and I was hoping for a dip. This time around, we still don't have a dip in Nvidia. We likely never will. So, all right, I don't own it direct. I'm going to own it indirectly through these ETFs. Then let's talk about Amazon. Amazon is kind of a forgotten big tech company along with Google right now. Amazon, I think, is going to be well positioned to leverage a lot of these conversational AI with Alexa and these devices that they've placed in every home. You might see a renewal of computing through voice and voice computing. Amazon is all about making deliveries and ordering commerce frictionless. That's kind of why they had launched this voice-only computer. Amazon is the leader in the West for e-commerce. They have become a verb. You don't say bite online anymore, you say bite on Amazon. And when you look at those numbers, they're still predicted to grow at 11% year over year. Their network of deliveries, their Rivian trucks, they're everywhere. They're the uncontested leader in e-commerce. E-commerce is the original mega trend of the internet. It's the original mega trend of the internet. And in my view, they are poised to keep dominating for the next decade. Again, I would not criticize anybody for owning Amazon or owning any stock for that matter. No investment advice, but I think Amazon is kind of a sure bet over a long run. Over the long run, can't go wrong in my view. No investment advice. Google is kind of the same way, except Google actually exceeds the rule of 40. It's at a 46. How much am I paying for growth at Google? A little more than Amazon, a 0.94, a little more expensive, but Google is still predicted to grow at 11%. It's got beautiful EBITDA margin at 35%. That's more than Apple, and it's got fairly high gross margin. Google is mostly a software business. Google as YouTube, very valuable franchise. Google as Android, okay, Android is an open source product, but it's still the competitor to iOS, the competitor to Apple. And of course, Google is the inventor of the GPT that OpenAI seized that opportunity. Google is making a comeback with Gemini and generative search. AI is one of the cornerstones of Google. So Google, you get a lot of Google ventures, you get a lot of Google investments. They have AlphaFold, for example, which is a specific AI generation system. They also have their self-driving car. What I like very much about Google is that they also own 5% of SpaceX. This is a company that has its hands in so many different businesses. They have a thriving cloud business, just like Amazon. I could have mentioned that for Amazon too, and Avenue for Growth. Google is such a solid tech company in my view that, once again, can you go wrong? Can anybody go wrong with Google? No investment advice. I own some Google. Let me move on to Meta. Meta is another one of these stocks that I used to own and that I sold for a profit, and that was a mistake yet again. I've always actually loved that Meta was entering the metaverse, as they called it, and was entering this digital world, digital spaces. And of course, they have Horizon World, and they're pushing their VR, their workplace opportunities. That's one aspect of the thesis. Of course, the bigger thesis of Meta right now is AI and the use of AI through Instagram, the use of AI through WhatsApp, the leverage of these established apps that already have 1 billion users, incorporating AI into them to make them ever more compelling. It was very fortunate that a lot of their investments in GPUs, a lot of the investments they were making for the metaverse are now being used for AI, for better targeting, for better advertising. And I still think the opportunity long run for a company like Meta, just like for a company like Apple, is these glasses, the computing through the glasses, the rise in prominence of the glasses over the phone. I think this is going to be a big deal, and the demonstration that they've had is a clear improvement. If you watch that keynote they had about a week ago, it's a clear improvement over the Apple Vision Pro, which gets me wondering, what is Apple working on? There is a competition for the next platform of computing. The phones were huge. The phones have replaced laptop. Are the smart glasses, the AR, VR glasses, going to be bigger than the phone? That's one of the big questions. And speaking of Microsoft now is a partner with Meta AI. Meta AI, when you put the goggles, you can actually pair it with your Microsoft operating system and see a virtual desktop. Microsoft is the partner of a lot of these companies, right? They partner with Nvidia for the GPUs, and they get access to these to this cloud and they can sell the cloud compute through the GPUs of Nvidia. This is the same story for Google and for Amazon. They both have their cloud service where they can resell the Nvidia computing power. All these companies are very intertwined, but of course a big part of the thesis of Microsoft is the AI and OpenAI and their large investment in OpenAI. I think Microsoft will greatly benefit from its OpenAI investment. This is a company that can put out of business much smaller companies really quickly. They have more than 100 million businesses using Microsoft products. A software update can make a billion-dollar company irrelevant. And this is why this company has had a moat for so long. Whenever they do a software update, they can make the billion-dollar company that is trading, that is hot and trending, they can make it irrelevant just through a software update. This is the power of Microsoft, and it's a company which is growing nicely at 15% and 16%. Think about that base. Think about growing at 15% when you have $245 billion in sales. That's quite impressive. Microsoft has a top-of-the-line EBITDA margin, economic margins of 53, and they achieved the rule of 40 handsomely with a 68. Meta too. Meta is at a 57 on the rule of 40. And the last company, which is, in my view, a full-fledged big tech stock, right? The founder of Tesla, well, the most important investor in Tesla, Elon Musk, is also the founder of OpenAI, and OpenAI, of course, is part of the Microsoft story, part of the Nvidia story. Tesla is a company that is intertwined with all of these other members of the ecosystem. Remember, 5 years ago, Tesla was putting itself up for sale to Apple, and Apple refused to buy Tesla for, I believe it was $45 billion. Tesla is building computing clusters of Nvidia chips, and they are at the heart of this AI revolution. Of course, they do make a computer on wheels or a robot on wheels called a car. And a lot of people say Tesla is an automobile company. But in my view, make no mistake, Tesla is much more than an automobile company, especially when you think about the next big opportunity for Tesla, which is self-driving, which is likely getting kicked off on 1010. And of course, self-driving, that used to be the self-driving car, or the car, that used to be a big project of Apple. Apple has abandoned that project. Nvidia is still working on that project. Google is still working on that project, and Tesla is working on that project. So there is more overlap than one would think when we study these companies. And of course, in the past 10 years, if you look at the best performers, they have been Nvidia and they have been Tesla. And so, in conclusion, this is why some people, for example, I would have a very hard time considering owning the S&P 500 as a good idea, because there's a lot of banks that, when I look on the balance sheet, I don't understand why I would want to own that. There's a lot of legacy companies with liabilities in the form of pensions that they have to pay, in the form of legacy debt, tech debt. When I look at the S&P 500, there's many industries I would not touch with a 10-foot pole, like airlines, for example, right? The S&P 500 scares me. When I look at the NASDAQ and the top companies in the NASDAQ, I am way less scared. And that's why the NASDAQ has been a cornerstone of my portfolio, not through my choice. If I had a choice to own something else, then the NASDAQ, I likely would be more heavy in a company like Tesla, more heavy in an asset like Bitcoin, and many of the companies I cover on the channel, including small caps. But I do think the Nasdaq is just a compounder, just an outstanding compounder, and these top companies, in my view, they will very much keep dominating. And the valuation, as you see on my spreadsheet, their valuation is not as nosebleed as many people would have you think. It's not that much of a nosebleed, especially if you look at a company like Amazon, like a Google, like an Nvidia. It's not as much of a nosebleed, and I find these companies quite interesting. So, no investment advice, no financial advice. This is not investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you for watching. And if you want to get access to my spreadsheet, I have more than 120 stocks that I rank on my EV over GP over RG metric. All of my premium content, everything is included in my Patreon. And of course, I do the regular updates on the channel, daily updates at this point. Again, no investment advice. Thanks for watching. Have a wonderful day.